Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Brian Stutland. He's the Chief Investment Officer, Equity Armor Investments. Brian, it is great to see you as always. Welcome back to Trade Talks, and I want to get your thoughts around the CPI data that came out this morning. The market seemed to have digested it in stride as expected.
Yeah, it was sort of interesting. I mean, it came in line, so that's what traders were kind of expecting to see, where we saw that 0.1 decline in the CPI number month over month. Year over year, it's still not great, and it seems like the Fed has still had a lot of talk. A lot of Fed governors out today, yesterday, last few days, basically saying they're going to continue on their path to raise rates. I think that sort of makes sense. But the U.S. Treasury market has a whole nother tone on what's going to happen, at least down 10 years down the road. The 10-year now below 3.5%.
And of course, stocks having a really good start to the year, kind of refreshing to see considering, how choppy December was. Do you think this is a head fake here? Or, I mean, perhaps investors think that earnings are going to be better than expected, and we have turned the corner when it comes to inflation.
Well, one area I like to look at is the semiconductors and that sector and how it's behaving, because they seem to sort of be the first to go when growth is back in play and the market wants to go significantly higher. And we are seeing that bottoming process take place. If you look at an ETF like the SMH, which tracks semiconductors and the chips, that looks like it's sort of making this head and shoulders type bottom on a technical level. A close higher today would be very bullish for that portion of it. And Jill, as you know, obviously semis and chips are a big portion of the Nasdaq index. So I have to imagine the Nasdaq sort of kind of moves along with it if this is sort of a bottoming process that's occurring in the chip sector.
Now, what about the Nasdaq-100 Volatility Index, or Vol-Q, right? So that's come down considerably from levels that we've seen. What does that suggest to you in terms of how traders are positioning?
Well, it's sort of interesting. We haven't made a lower low yet that we saw in December on Vol-Q. So I'd still like to see that. But what it does mean is at least traders, at least today, traders are taking off options. They're not willing to be long options. They actually rather own stocks. And that's probably somewhat of a bullish sign for the market as well, because when you have people sort of taking the risk off, taking their protection off, and then being willing to actually own the outright underlying stock as the NASDAQ is, then that's very bullish. So if we see Vol-Q sort of tick around 22, around the 20 level, somewhere in there, now that's starting to make lower lows. When I see that in a volatility index occur, to me, that's a bullish sign for the stock index that it behaves with. And so that too would be very bullish for the NASDAQ. So a couple things: the semis, the chips behaving well, and volatility coming down hard. Probably some bullish signs here for the NASDAQ.
All right, and Brian, to wrap up here, of course, we know sentiment was really negative going into 2023, and we have the big banks kicking off earnings in earnest tomorrow. What are going to be the key themes that you're going to listen for when it comes to earnings? Is it going to be margin, cost of capital? What's going to be the most important thing as you think about guidance and what this could look like over the next couple quarters?
Well, we did hear some things from Wells Fargo that they're backing off on their mortgage area and lending there. And obviously that makes sense. Like some of these basically big prime brokers, prime banks, the JP Morgans, the Bank of Americas of the world, a negative yield curve is not great for them because they have to borrow at higher rates and lend at lower rates down on the back end of the curve to consumers. So to me, I think still in play are some of these more insurance type financials type stocks. Some of the exchanges in the financial world, I would play that. A Berkshire Hathaway, which kind of incorporates all of that, are stocks that we own for clients right now that we'd be playing more to the upside on versus, let's say, a JP Morgan, Bank of America. We do own those stocks, but very much underweight relative to other indexes. And so I think you're going to continue to see that as the earnings. We'll see how that plays out. Maybe all the bad news is built in and bad news will be good news. So it'll be interesting to see how some of these, big bank stocks sort of react in the next few days when their earnings picture comes out.
All right, Brian, good to see you on a day where there's green on the screen. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.